All right, let's talk Credo Technology. They just released their Q1 numbers for fiscal 26, and wow, Blockbuster doesn't even begin to cover it. We're going to break down why this company is shifting gears from just riding the AI wave to actually driving it. So how did the market react? Well, the verdict came in fast. The stock shot up over 8% in after hours. I mean, that's not just a thumbs up from investors, that's a standing ovation. So what exactly caused that pop? Let's get into the numbers. Revenue came in at a whopping $223 million. The street was only hoping for $190 million. I mean, that is a massive beat. And get this, it's a 274% jump from last year. Then you look at the bottom line. Non-GAAP EPS hit 52 cents. The estimate? Just 36 cents. This wasn't just a beat, this was a statement quarter. And that's really the big story here. The narrative around Credo is shifting. It's no longer about them just being an AI beneficiary, kind of tagging along for the ride. Nope. They are now becoming a core driver of this whole thing, the execution engine that the big hyperscalers absolutely need to build out their AI infrastructure. So the key to all of this is their main piece of tech, the active electrical cable, or AEC. You might be wondering, what exactly is that? Well, the easiest way to think about it is like a supercharged copper cable. It's got these little bits of electronics built right in that clean up and boost the signal. This lets them get insane speeds and reliability for all the connections happening inside these massive AI data centers. It's the secret sauce.
Okay, so why would a giant data center operator choose Credo's AECs over the more traditional optical stuff? It really boils down to two huge, game-changing things: reliability and power. Management's talking about their cables being up to 1,000 times more reliable. Think about that. No more of those dreaded link flaps, those little connection drops that can mess up an entire AI training run. And on top of that, they use half the power. In a data center, that's just massive.
And you don't have to take my word for it. The CEO, Bill Brennan, said it perfectly on the call. He just put it out there, plain and simple. If our customers can use an AEC, they will use an AEC. I mean, that level of confidence, it tells you everything about how strong their product is right now.
All right, so the tech is a knockout. Let's shift gears and look at the bigger picture, the strategy. We're going to unpack three key themes that really stood out from the earnings call. First thing we got to talk about is customer concentration. And wow, is it concentrated. In Q1, a staggering 88% of their revenue came from just three customers. Your biggest at 35%, the next at 33%, and the third at 20%. Now, on one hand, that's where this insane growth is coming from. But on the other hand, that's a big risk investors are always watching. So, what's the plan?
Well, they actually laid out a super clear playbook to tackle this. Step 1 is already in motion. They've got a fourth major hyperscaler ramping up, and they expect that one to be a 10% plus customer this year. Awesome. Step 2, a fifth one is already qualified and should start bringing in revenue later this year. And for step 3, they're not just getting more customers, they're expanding their playground, moving into new areas like PCIe retimers, which just blows their total addressable market wide open.
The second big theme from the call, de-risking the story. Right before this report dropped, Credo settled some major patent lawsuits with competitors Amphenol and Volex. And this is a really big deal. It basically wipes a huge question mark off the table. All that litigation uncertainty, gone. It solidifies their IP and lets them just focus on what they do best, executing. And that execution piece really gets to the heart of their competitive moat. When the CEO was asked about these settlements, he gave a great answer. He basically said their strategy isn't just about winning in court. It's about being so deeply embedded with their customers, shipping the next-gen stuff first, and just running circles around everyone else on execution. That in his own words, they're just difficult to compete with. Okay, so that's the strategy. Now for the really exciting part, the road ahead. Let's look at the guidance because frankly, it was just as impressive as the quarter they just put up. Let's break this down. For Q2, they're guiding revenue between $230 and $240 million. Now, to put that in perspective, Wall Street was penciling in around $202 million. That's not just beating guidance expectations, that's demolishing them. And it gets even better. For the full year, and here it is, the big number for the whole fiscal year. They're expecting around 120% revenue growth. Just let that sink in. 120%. For a company of this scale, that is just incredible. It shows this isn't a one-off quarter. The momentum is actually building. All right, let's bring it all home. We've got a massive earnings beat, monster guidance, and a crystal clear strategy. So that brings us to the final part of our analysis, the next call and our rating.
So this is the big question on everyone's mind, right? After a quarter like this, with guidance this strong, what's the call on CRDO? Where do we go from here?
Look, the bull case here is just undeniable at this point. They've proven they can execute at the highest level. They're expanding their market beyond just AECs into areas like PCIe. The plan to diversify their customer base is not just a plan, it's actually happening. And that competitive moat, it looks deeper and wider than ever, especially with those lawsuits in the rearview mirror. So when you add it all up, the stellar execution, the huge AI tailwinds, and the absolutely massive growth they've laid out for us, our call on Credo Technology is simple: outperform.
And as always, just a quick reminder that this analysis is for informational purposes. It is not financial advice.